Welcome to the African Market Network. Rwanda has no oil, no major mineral export base, and one of the smallest economies in East Africa. It also just posted 9.4% growth. This is the case for pricing Rwanda on governance, not on commodities. Start with the number itself, because the headline figure moves. Real GDP growth came in at 9.4% in 2025, beating every forecast on the table. The International Monetary Fund puts 2026 growth at 7.2%. The African Development Bank puts it at 7%. Either way, that's a deceleration from a hot year, not a collapse. Before going further, here's where Rwanda's economy actually runs today. Services and trade lead, then transportation and storage, manufacturing, mining and quarrying, tourism and hospitality, and energy, including methane gas extraction. The National Bank of Rwanda raised its policy rate 50 basis points to 7.25% in February 2026, after inflation hit 8.9% above target. Fitch projects the fiscal deficit narrowing to 3.6% of GDP this year. But the current account deficit stays wide, near 15% of GDP, on import-heavy infrastructure spend. And the sovereign sits at B+ with Fitch, B2 with Moody's, sub-investment grade, full stop. Here's where the thesis actually starts. The World Bank retired its old Ease of Doing Business Index in 2021 after a data scandal. Its replacement, Business Ready, or B Ready, launched in 2024, and Rwanda topped Sub-Saharan Africa in both editions. In the 2025 report, Rwanda ranked 12th globally on operational efficiency, the only Sub-Saharan African economy at that tier. Transparency International's 2025 Corruption Perceptions Index scored Rwanda 58 out of 100, a fourth straight year of improvement, 41st globally. Compare that to the neighborhood. Kenya scores 30, Uganda 25, the Democratic Republic of Congo 20. For a risk premium calculation, that spread is the entire argument. That governance story has physical infrastructure behind it. The Kigali Convention Center has hosted an African Union Summit and the 2022 Commonwealth Heads of Government meeting. Rwanda's conference tourism sector earned $94.7 million in 2025, targeting $224 million by 2029. And the Kigali International Financial Center now ranks third among Africa's financial centers, behind only Casablanca and Mauritius. Irembo, Rwanda's e-government platform, now handles over 90 government services online, with transaction volume up 30% in 2024 alone. For an investor, that's not a convenient story. It's a proxy for how quickly regulatory approvals and permits actually move. Here's the actual mechanism named. The Rwanda Development Board offers a 7-year corporate tax holiday for investments of $50 million or more in energy, manufacturing, tourism, health, information, and communications technology, and exports. Qualifying sectors otherwise get a preferential 15% corporate tax rate plus capital gains exemption. Rwanda gave up 291 billion Rwandan francs in tax breaks in the latest fiscal year. That's the government's own stated price tag on this moat. This isn't theoretical. The International Finance Corporation holds a $169 million Rwanda portfolio, with a further $432 million in the pipeline. British international investment, alongside Convergence Partners and 4 other backers, financed Paradigm Tower Ventures' acquisition of roughly 1,467 telecom tower sites and a $200 million World Bank loan for Rwanda's energy sector was matched with $100 million from the Asian Infrastructure Investment Bank. Now the risks, starting with the structural one. Rwanda's population is roughly 14.1 million. Nominal GDP sits near $15 billion. Income per capita is close to $1,040. It's landlocked, with the freight costs that implies. This is a small market. The thesis has to be regional and export-facing, not domestic consumption-facing. The largest single risk sits on the border. Despite a United States brokered peace accord signed in December 2025, fighting from the M23 rebel group in eastern Congo intensified through 2026, displacing more than 7 million people. Washington has responded with direct sanctions on Rwanda's own defense force and senior officers over alleged support for M23, and on entities accused of trafficking Congolese minerals through Rwanda. A trade tied to a record $2 billion in Rwandan gold exports in 2025. For any institution running sanctions screening, this is not a footnote. It's active exposure. And here's the tension the corruption ranking doesn't capture. Freedom House's 2026 report describes continued suppression of political dissent in Rwanda, surveillance, arbitrary detention, and a judiciary. It says lacks independence from the executive in politically sensitive cases. Administrative governance and political governance are not the same thing. Rwanda scores strongly on one and poorly on the other, and a serious risk model prices both. Foreign grants now fund roughly 12.7% of the national budget, down from a historically much higher dependency level. Rwanda calls this its most self-reliant budget yet. Some of that shift is also donor pullback tied to the regional conflict, not purely a growth story. 3 things to track. 1. Whether the December Accord actually holds and sanctions exposure eases. 2. Whether the current account deficit narrows as Bugesera Airport construction winds down. 3. Whether Be Ready 2026 confirms Rwanda's operational efficiency ranking again, or whether that was a peak. Rwanda prices governance, not resources, and right now both the discount and the risk are real. We'll be tracking all 3 signals. If African market opportunities are what you're here for, this is the channel for that. See you in the next one.